How would you define impact?
I think it's an entirely overused word. I think it really comes down to contribution. Contribution to society, contribution to community.
Is that not the same also then in defining what is value?
But I think value talks a little bit more about creation.
That governments face today in terms of a fight over where resources then go to, which angle do they
Governments are inefficient by nature, right, in many ways. And part of that comes from having, in theory, an endless supply of money to pay your overhead, right? What keeps entrepreneurs up at night?
Yeah.
How do I pay overhead at the end of the month?
Yeah.
Right?
Yeah.
Always. So that's a key motivator, being able to keep the ship afloat.
This is Unboxing Impact, a series of conversations with people working at the intersection of business, capital, and social change. I am Sunil Lalvani, and my work spans international business and more than a decade building a social enterprise that delivers sustainable access to clean water across rural Africa. In this series, we explore what impact really means, the trade-offs and tensions involved, and how success should be defined beyond financial return.
Jay Cziraky is an entrepreneur, impact investor, and humanitarian operator with more than 25 years of experience working in conflict zones and post-conflict regions. Born in Canada to one of the oldest noble families of Hungary, dating back to 1247, Jay carries a deep sense of history, community, and general stewardship into his career. Jay is the founder of the No-End philosophy, created to build perpetual, non-extractive entities that prioritize long-term societal benefit over short-term gain. He is an active member of YPO and participates in the World Economic Forum and global community initiatives. He divides his time between Dubai, Switzerland, and Budapest, and is committed to shaping new socioeconomic models for future generations. Jay Cziraky, welcome to Unboxing Impact.
It's good to see you, Sunil.
Good
to be here, brother.
I'm really glad we could do this because obviously we've been friends a while, and we talk about our favorite joint subject, which is impact. So let's start with that. How would you define impact?
Great question. So I think it's an entirely overused word. You know what I mean? And I think it means something different to everybody. And I think that's one of the great challenges when it comes to impact investing, operating impact, reviewing impact, reporting impact. So I think it really comes down to contribution, right? Contribution to society, contribution to community, these sort of ideas. And another member involved with us, Randall Zindler, he always has been really against the whole idea of impact. And he really comes back to value, not values, but value. Like, are you creating value? In what you're doing, whether that is in your organization, you as a self, you as whatever, and trying to find a different word for impact, because I believe it is a misconstrued word many times.
Is that not the same also then in defining what is value?
Yeah, but I think value talks a little bit more about creation than impact is on top of.
Okay.
If you look at the as a verb.
Okay.
So I don't know, but it is because I think when you talk to people, finding their impact. Actually, I was having a conversation with a big VC fund yesterday, and it was again about impact. You know what I mean? And how, are you defining impact on what you're doing to society, or how are you evaluating it? What are you doing? So to the point of unboxing impact, even just defining what that is a huge task.
Absolutely.
And I think it means something also depending on your vantage point.
So where in that? Yes, it is huge, and hence we have a podcast on this.
Yeah.
And it's so interesting talking to people like you and the guests I have, because it's typically people from a business background who are now in impact. So it's who's made that sort of transition into what.
Yeah.
So where on that definition does, let's say, creating value or additionality, where does money or finance or financial return come into that equation?
Yeah,
if at all.
Well, it has to in some regard, of course. So that's interesting, because I think really when I think to myself, I go back to the idea of contribution. Probably more so than any other aspect of it, right? Because I think you can have impact in a for-profit setup, in a non-profit setup, in an NGO setup, in a general community setup, across all of these. And a little bit is about picking your punches. I mean, and how do you evaluate that? So I was behind the first and only private equity company in Afghanistan. And we launched this in 2011. and called In Frontier. And when we did that, impact investing wasn't really a word at the time. Now, and we had our own version of impact without ever actually using the word. Now, our focus was really on sustainable jobs, right? That was economically sustainable jobs, not environmentally sustainable, economically sustainable jobs, because that was what Afghanistan needed.
Yeah.
And they needed them away from the war effort and et cetera, et cetera. So for us, the numbers that were interesting to us was the amount of employment that we were contributing. Now, we had to make financial returns because we were a for-profit private equity company, but we told our investors, like, this needs to be patient capital. Don't expect large returns. That's not the point. You know what I mean? But it was to pay a financial return because that was the rules of the investors. So I think money is only one part of a general impact environment. And I think you have stakeholders from the environment, from people in community. Sure, if there is investors involved, sometimes there needs to be returns, sometimes not, which is some of the stuff that you and I are involved in.
Yeah.
So I think, again, it comes down to vantage point. That would be.
But so when was this you were talking about, the Afghanistan example?
2011.
Okay, so what were your investors' perspectives at that time in terms of these phrases, which are still not fully understood, but patient capital, impact related returns?
Yeah, the reality of it was finding private investors was incredibly difficult. So at the end of the day, we wound up either with government or what I'd call semi-government. So by semi-government, I mean there's banks and funds out there whose money comes from government, and they're expected to invest down into impact or social enterprise or these sort of things. They were willing to take that kind of patient capital or take that risk on return and slow rate of return. Back then, private investors simply weren't.
Sure.
And I mean, Afghanistan is also quite extreme compared to a lot of other frontier markets. I mean, we were definitely at the sharp end of the stick. We're still the only private equity company in Afghanistan.
Well, so why don't we just go back in history a bit? Because we dive straight into the impact question, which is what I like to do.
Yeah.
But briefly tell us about your earlier work, because you have a fascinating history. Not only you as a Cziraky family, which goes back 800 years or so, but even in your early business career, just give us a brief about what took you to Afghanistan and other weird and wonderful places like this.
Sure. Yeah. So the quick thing is, it is an old family. So the house my father was born in, the castle he was born in, we had since 1247. He was the last one born there.
1247.
1247. So I was with people with my last name living in that house while the Turks burnt down one of them, but the one we built, but that same piece of land. And a little bit going further back to the foundation of Hungary. So many generations. But I learned something from my family generations, and I think that's important what carries forward, which was a concept of community leadership, which was a requirement in being the type of family that we were, thinking in ultra long generational terms, and consistency, which I don't think gets enough press these days. Just consistent forms of leadership, consistent forms of communication, people need to know what your intentions are and where you're going in order to follow. So that's kind of what I learned from my grandparents and my great-grandparents. But then when I graduated university, it was the end of the Bosnian War, and it was Eastern Europe opening up, and my family was finally allowed to go back to Hungary. So my brother went over, and then I shortly followed him. We joined a guy who started a small transport company, and the first contracts were bringing humanitarian aid and military supplies into Bosnia for post-war reconstruction. So I lived between Budapest and Sarajevo. I moved over in 1997, and at the end. So I learned a lot about what good aid looks like, what bad aid looks like, good reconstruction looks like, how the international community behaves, how the media behaves, all these different things. And that was sense of duty, sense of adventure. There's a bunch of different reasons for doing that. And then that led to Kosovo, and I lived in Macedonia during the buildup. I lived in Albania during the war and supporting the refugee crisis up at Kukis. And then I lived in Pristina for some time during post-war reconstruction. And then later on was Afghanistan. So the company that I was a partner in, Move One, we were the logistics company for the Special Forces response to September 11th. So I was living in Uzbekistan right after September 11th. And in December, we orchestrated the first land convoy into Afghanistan for the American forces.
Wow.
3 months and a couple days after September 11th. And then I lived in Kabul Again, a lot of reconstruction, a lot of humanitarian aid. Again, seeing what works and what doesn't work, right? And also, I didn't live in embassy compounds. I didn't live in military bases. I had access to them, but I lived outside the wire. So we lived with the indigenous people. We lived with the Afghans, and different things. And I did the same in Iraq, going up with the first wave into Baghdad, and I lived in Baghdad. And again, projects across Africa, Central Asia, and stuff. But again, all of this just got to show how does the international community, investment community, NGO community, commercial community, which is the one that I belong to, how do we all work and interact inside these areas? And that's really what's led me down the whole path of impact, nonprofit, humanitarian aid, etc.
So I was going to ask that. And so in the story, so obviously that's a fascinating history, and I know we could do a whole other podcast just on your stories, because we've had drinks and dinners over it anyway.
Yeah.
But you obviously went into these areas with a commercial mindset, and that's fine. That's where you came from. What was the trigger then that switched you to say, okay, enough of that, and now I want to focus on impact?
Yeah, I think it was bringing a business mindset, because what I saw was inefficiencies, right? So I really went as a 24-year-old. I went for adventure, right? A sense of history. It was fun. Whatever you were doing was on CNN every day. You know what I mean? It was just part of all that. That was really the romantic adventure side of it. But what really I saw was just inefficiencies and lack of focus sometimes, I think, which comes down to inefficiency, and not using the right matrix to evaluate what people are doing, right? So this is how we kind of got to, I started slowly making transitions mentally. And one thing, I think it was a Wall Street Journal, and it was in and around 2003, 2004, we got a call, and they wanted to interview us about our business in Bosnia. The Bosnian War had ended and Reconstruction ended a long time ago. And we said, why? And they said, well, you're one of the largest foreign investors in Bosnia. And we said, no, that's impossible. We have like 10 people. I think we do $1 million a year in revenue. They said, no, that makes you one of the largest foreign investors in Bosnia. And we're like, okay, that's a problem. And one thing I was really proud of with Move One is we never used to leave countries fully like the rest of the international community. We kept Albania around still to this day. I'm no longer with Move One, but I know the Albania office is still there, because we didn't want to let the people go that we employed. It didn't matter if we made money or didn't make money. I mean, as long as we broke even, more or less. So you started seeing these different things, but I also didn't like the amount of extraction that I saw, especially from commercial companies, right? Making so much money off international contracts, that profit not staying inside those communities. And again, then the communities leaving, watching us leave Kosovo, watching us leave Bosnia, and later leave Afghanistan and Iraq as well to a certain degree. So that kind of always didn't sit with me. And then it was, is there a better way to do things, right? Really just looking at, are we spending money wisely? Where is it going? How does it work? And this is where the transition really kind of started. And it just kind of started to snowball from there. And we started looking, well, how do we invest in these communities outside of just government relations and government interaction? So that was kind of the catalyst, was wastage, really, and extraction. I think those two things combined.
Okay, great point. Great points. And I'm going to jump now to, I'll say present day, but maybe I guess the last year or so. So something I've joined you on the journey on very, very proudly is No End. We obviously connected initially through IPO, and more importantly through IPO on the impact networks and the non-profit networks, because we had a shared passion for giving back. And I run a non-profit, as you know, and my story is always that I think there is a necessary trade-off between impact and financial investment return. That doesn't mean you've got to go to one extreme or the other. I happen to go to a non-profit end, but I firmly believe that impact and financial return can coexist. But I think there is a necessary compromise. And I think the importance about there being an investment return on impact, let's say, is because all organizations are competing for a central pool of money, right? And who people are sitting on that money, they want to see, well, what am I going to get for that? And some of them, 1% will say, okay, it'll go to non-profit, it'll go to philanthropy, and it can go. But the rest of it is going to compete for financial returns. You've created a very interesting hybrid, let's say, in the no-end philosophy. Again, give us a brief intro into what that is before we start diving into talking about it.
Yeah, sure. So the whole no-end philosophy concept really came up about the why, right? And the why started with there's 4 billion people out there that live in fragility, right? Whether that is in a post-war situation like Afghanistan, chronically, poor, like rural agriculture areas in Africa that don't have a current conflict or anything else going on. Inner city Toronto areas where I grew up, right? In different things. So you have this fragility around the whole world. And I was sitting around one day thinking, well, is there anything we can do about that? Right. And that was the why, right? And is there anything from the 25 plus years experience I had running around all these different sort of communities and areas and conflict zones, et cetera, that we could learn? And can we solve that? And no end kind of birthed out of that because I couldn't find a solution, right? At the end of the day. And when we looked at it is, in a nutshell, the idea of no end is to create global consumer businesses that reinvest all profits and circulate all profits in the global fragile economy on scale globally forever. Right? That's basically what we do.
Yeah.
And the idea is that can we put the power of consumer spending and what people spend on every day to benefit not only the 4 billion people in need around the world, but the 4 billion people in current working class, which the working class in general is not getting better on a global basis.
Yeah.
And that's kind of the genesis behind the whole idea. And then there's a whole history on how we came up to that. But in short, if we look at the balance between commerce and community, has it ever been in balance since hunter-gathering days, right? If we look at capitalism in its current format, it prioritizes commerce and neglects community.
Yeah.
Right? If we look at Marxism, pure Marxism, not what was created in his name, but pure Marxism, it prioritizes community and kind of neglects commerce. Doesn't really work. And in current kind of modern socialist and democratic states, we're neglecting both commerce and community for the sake of government. It really doesn't work.
Yes.
Right?
That's a good
So
way to look at it.
is there a way to bring those back into organic balance? And the only way I could think of was putting the power of community into commerce. And that's with every dollar or dirham or whatever you spend every single day. That was a genesis. But it was a concept that came out of trying to fill a need.
Okay.
And that's, I don't know if that answered the question.
Yeah, no, absolutely. And I've got a ton more questions. If we have time, I do want to come back to the Marxist thing, but this is not a talk about Marxism.
Yeah.
So I love the concept, and that's why I joined you on the journey. First of all, no end. The name.
Yeah.
One thing that frustrates me, that goes into this whole point about commerce and community. One thing that frustrates me, I work a lot with London Business School, but a lot of the business schools do this, is in class 101 of entrepreneurship. They will tell you about when you're starting your business and you're making your business plan, at the starting point, figure out what your exit's going to be. And I think we're just starting off on completely the wrong premise, exactly for that reason. You're starting a business so you can exit it, right? Yeah. And I just think that's capitalism in its extreme, because you're just doing something for the sake of making money.
Yeah.
And I think that's fundamentally wrong. And I think that's exactly where the word no end comes from. Exactly, right? Is it that there is no end to these companies, in the sense that I'm not starting it so I can exit it. I'm building it so it's got a purpose, it's got longevity, and it's going to go on and serve society and serve some financial investors as well. Yeah. We could talk about that. But the main purpose of that no end title is exactly that. Is that correct?
Yeah, absolutely. No end came from our 3 core ethos, which is no extraction. And extraction is different from return or profit. Right? I used to say no returns, but then I realized that wasn't true. Right? It's no extraction. No timelines, building businesses and organizations at the natural speed they should be built. How many great organizations go under because they expand too fast, or too much
And
pressure on
because of financial pressures, right?
short-term bottom line returns, and then most importantly, no exits. And that's what came to no, because no exits for me. Going back one, so we had what I call our first family business for 700 years. Now, we weren't allowed to exit it, right? When you're a family of counts overseeing an area of land or for a country, you can't IPO it, you can't sell it to private equity, you can't give it back to the emperor or the king, and if you do a bad job, your own people kill you, right? So there's motivation to actually lead correctly, and there's all sorts of stories in our family of how our people saved us and not killed us. And rarely what is built for short-term profitability is actually good for society as a whole. And it's the guy behind the Aretio whose quote is, that's a quote from. But I agree with it, right? And to your point about the business schools, I absolutely, exits are counterproductive to growing a sustainable, healthy economic environment. So why can't you just build in perpetuity? Why can't you just build a company and eventually hand it off to others, whether that's your family or other people, etc. But it doesn't mean no return. It just means no extraction.
Okay.
And I think that's a really
just dive into those two terms. What you mean by that? No extraction, no return. No extraction, but some return.
Yeah, because sometimes return is a little bit about perception. Right? You have financial return, i.e., I put capital into something and I expect something back. That's a direct return. But also, when you do invest, look at all the other returns that happen. And I don't just mean, creating sustainability so people can eat, get healthcare, education. Those are huge returns. But those societies also produce more money. It may not go back to the actual investor on a direct way, but the source of your wealth is selling products and goods and services and different things that will come back. And as I say to people on a regular basis, and usually funny inside very high net worth sort of environments, I get a strange reaction. I say, do you realize that all wealth started with a customer? And they'd be like, no, I made money on this arbitrage and different things. And I'm like, no. Where did the money start from? It all comes from somebody selling
something,
goods or services to an individual. Without that trade, nothing happens. No wealth has ever been created. So by creating a more sustainable and growing middle class and lifting the fragile classes of populations up into middle class, we create economic wealth. And that will trickle into people who are asset owners and equity owners, right? So it's about not over extracting. And what value do you get from making an investment and returning back 15x, 20x, et cetera, right? Without putting that money back into the economy. The core values is around profits must circulate. Right? We circulate through the whole system. So that's what I mean by extraction. Extraction is taking you more than you need.
Great. Okay.
Right? So how much money as an equity owner in an organization do you need to take out of that organization every year? And if you can tell me you need more than what you need for your family needs every year, I question that. And I'm not saying what your family needs should be. I mean, people have the right to spend and do what they want, and this is not what it's about. It's about, are you extracting more and taking it out of the economy when it could be circulating with your employees, with your communities, with these sort of things. That's the whole basis behind the idea of no extraction.
So I love that. We're so aligned. We're so aligned on that. And because I think the whole no end concept, or as you've defined it now, and serving society, it's not a question of necessarily a for-profit versus a non-profit. It's about what's the end result going to be. Again, going back to the word of impact. What's the societal impact going to be? And I like that word about extraction, because again, maybe for others to understand it, we can look at the no end philosophy as a holding company, if you like, right? And people can come into that vehicle, and that vehicle will then have companies, organizations under it, and there's nothing to say that those companies then can't make a profit. The question is actually what happens to those profits, right? And to me, that becomes let's say the evil in society is profits and then dividends.
Yeah.
Okay, because if you're investing anything just to maximize your dividends to take it out, extraction to your point,
Yeah.
and I love how you described it, that starts to become a problem, and that's where you start to get modern day capitalism, where you've got all the wealth now sitting at the top because it's been extracted
Yeah.
from everyone, and you're right, everything has to end up with a customer to pay for something, but you're now impoverishing the end customer. It's a zero sum game, and it's going to lead to it's leading to already, we can see very huge societal problems. It's only going to get worse unless something's done. But if we have a model like No End, you can have different business concepts, some making more profit, some making less profit, some being non-profits, but everything stays in the umbrella. And some are cross-subsidizing the other model. That's the concept, correct?
Absolutely. And the only thing currently is in a nonprofit structure with a No End philosophy is the holdco, right? And that's because if you're going to build something generationally, you need to lock it up so a future generation can't exploit it and extract from it.
Yeah.
Right? Because board resolutions can be changed, as we know.
Yes.
Right?
Yes.
But by law, a nonprofit limited liability company cannot pay a dividend to the shareholders. And that's a really key point, right? Is how shareholders interact. Everything else under it, not only are they limited liability companies, they need to be, right? They need to be traditional LLCs. They need to generate revenue. They need to spend that revenue on gross profit, where you can do impact at gross profit, money on overheads, right? And then have net profits. And those net profits can be either reinvested in that particular community, which is the company, or into other social enterprises. And also still important charity, which we don't talk about enough. Right. So but again, it's all about circulation. Right. And about dividends are extractive. Right. And by nature. And I still argue whether or not we need them. But the rest of the system underneath is traditional businesses. But you're letting it flow on the inside. And I think that's why we use things like debt for scaling. Right. So you have a fixed coupon rate of return to investors, but we started with philanthropic capital. Right. And how do you use philanthropic capital to watch that grow in terms of multi returns? And there is, as we know, more going into building a product and service than just capital.
Yes.
Right. And the rest of the items in the circle don't always get the return that they deserve. So that's another reason by keeping it in this constant flow state.
And I guess that's the beauty of not having this necessity to be satisfying financial shareholders. Because it means, I mean, my common talk is, if you are trying to maximize financial return for shareholders for dividend purposes, you have to necessarily maximize revenue and minimize cost. And if you're going to minimize cost, it means you are going to be paying the lowest salaries you can. You're going to be extracting the cheapest materials that you can. You're going to be using the cheapest probably most polluting sources you can, et cetera, et cetera. Whereas without that necessity to satisfy shareholders at the end of the day, you can pay a living wage and perhaps beyond a living wage. You can be using more renewable materials, and I know we could talk about Danish Van and the coffee concept. About how you're supporting, the small farmers at the end of the day and ensuring that, because that drive is not there. Again, you need to make a profit because finance does make the world go around. It's the oxygen that we need. But again, your word extractive, we're not bringing some of that in to then create as much as we can to then take it out. Let it stay in there and let it, exactly as you said, build societal return. Because also what societal return does, and I could talk about that for me in the water space, is there's well-proven data that for every dollar you invest in, or donate, let's say, but invest in rural water in Africa, there is a 7x financial return. So you talk to any financial investor and say, give me $1 and I'll give you 7x back. They'll bite your hand off for that kind of return. I can do that with rural water. The only problem is that 7x return doesn't go to the financial investor. It goes to society. Okay. But what I always say is once you've given that return to the society, there are then financial investments you can make into that, because now you've given them water, you've opened up schools, you've opened up some small farms, now you can start working with those farmers and local businesses, etc. But there needs to be there needs to be that help. And I think no one encompasses all of that, right?
No, I think so. And you're talking about the concept of from surviving to thriving, right? Which is huge in rural communities, and which drawed me to Project Maji. And I have a couple things I want to say specifically about Project Maji and where I see it fitting, how it fits inside the no end philosophy. So that's just, please remember that point, because I think it's really key. But when he talked about circulation a minute or two ago, right? And he talked about how if you're not paying your employees well, then you're shrinking up the pool of money that's allowed to buy products. So I'm not sure if I'm allowed to swear on this podcast, but it's what I call the circle of fuckery, right? And this is embedded in current economics, right? From entertainment to the stock market to what the consumer want you to say. So without naming a company, back during the financial crisis, I was visiting with the C-level of a company in the U.S., a large one, who was laying off thousands and thousands of people. Right? And I said, this doesn't seem right. And they're like, oh, it's a financial crisis. And I said, but you're cash flow positive.
Yeah.
You are profitable. You have billions of dollars in the bank that you can't spend because your company's so restrictive on how you are allowed to use your saved capital. Why are you laying off, I believe it was in the tens of thousands of people? Said our stock price is down. Said, okay, but you're profitable, right? So you're laying off people. And when you lay off that many people, you're laying off people who need that money to pay rent, pay mortgages, pay their kids' education, different things. And why are you doing it? Shareholder pressure. Right? Okay. And they said, if we don't do this, we're just going to get fired, and the next person that comes in the door is going to do it. Okay, I understand that too. Who are the main shareholders? Pension funds, financial institutions. So you're laying off the people whose pensions are putting the pressure on you to get higher returns. So it just goes like this. It does the same thing around, why we're talking about consumer spending. It goes the same thing around why are professional athletes now paid so much money that regular people who want to watch them can't afford to go to a match because they have to pay that much to get up. And the whole thing goes around in circles. And in every single one of these, the common working family is the one left out. On the end. And that's, you need to use circulation of money for good, not for extraction. And this is what it constantly comes down to. It's where does the flow of money move? And how do you use that money? But then speaking quickly to the what I call the capital population, which is more or less 80 million people, right? Global 1%. They have a huge role. And I'm not, that their factor is great families and companies and organizations in that 80 million that do good things. There's just not enough of them to the ratio of the money that sits there and to what is actually needed to go benefit society. And this is about unlocking that capital. And that's why we use debt. You unlock that capital to go scale things, right? Go even with things like with Project Maji, because you have an economic return policy, like in how the flow of money works to maintain wells and everything else. At some point, you can service debt. There's more money sitting in excess capital that can go to fund these sort of things. And by excess capital, I really mean excess capital. So the average working family has capital, but it's tied up in a house, it's tied up in cars, it's tied up in pension funds, it's tied up in children's education. That's not excess capital.
Sure.
Right?
That's right.
We're talking about excess capital that's just sitting in investment accounts, sitting in real estate, sitting in art, all these different things that's not moving or benefiting society, right? Not that many people have that kind of wealth.
Sure.
That's what we need to unlock. And you need so little of it when you look at it. When you look at the amount of capital that was used to build Project Maji, and if I understand, it's what, 500,000 people a day? Right? Wasn't very much.
No.
When you look at the billions or trillions of dollars that sit in that area. And think about doing that on scale. That's the idea behind the no-end philosophy, is to unlock that money, empower entrepreneurs and business leaders to create these type of companies so we have de-risked retained earnings that can go into things like Project Maji, right? Because it's that flow of funds. We're in what I call the money in business, not the money out business.
Okay,
right?
I like that.
How do we take how do we circulate that money inside the economy? How do we help move what you've spent on your coffee this morning, or on the last T-shirt you bought, or putting fuel in your car, for that matter, right? How does that money move on to in better middle class lives, and then de-risk and invest in social enterprise? The money out business is your business, right? And if I can take a minute to do a shameless pledge of Project Maji,
Please.
but 25 years of working in the field, you know what good looks like, and you know what good doesn't look like. And I know that you have told me that you've gone into villages where wells have been drilled before by other well-intentioned people that simply don't work anymore. And you know, the fact is, the term well-intentioned, because it really is well-intentioned how that first one went, but it wasn't planned well. And this goes back to my kind of what I've learned over the 25 years is, how do you build something that sticks around? How do you use the right technology? What I know is, how do you have the maintenance plans and different things that you told to ensure that those wells are ongoing? No end, and everything we build will never know what you know, right? But what we do know how to do is find organizations like you, and bring that money in, and how to communicate that to consumers. That's our job, right? And we work with excellent organizations in India and in Africa and in Latin America and different places that are also like Project Maji, but they have long-term, economically sustainable plans. So when I use the word sustainable, I'm really talking about economic sustainability and financial sustainability, not environmental sustainability. Again, you do that, but it's a job of other organizations, right? How do you put that in good money into good money out? That's where I found that there was a hole in the market, right? And that's what No End came in to replace.
That's great. So a couple of really, really good points there. One, I really like the athlete's example. That really sort of surmises where we are today in what I term
We're gonna have to create a circle of fuckery podcast.
Yeah, well, absolutely, yeah. With the star and the hashtags on it, but exactly in this late stage capitalism where we are today, we're being so extractive, to keep using your word, which is great. That exactly, it's really self-defeating as well for entrepreneurs, because if you keep on at the level we're going, you're not going to have consumers to buy your product at the end of the day.
Exactly.
And I guess just the way you've described the No End philosophy umbrella, if you like, it's almost, if I want to phrase it this way, it's almost redefining what governments should be doing with taxes to a degree, right? Because right now you've got big corporates making huge profits, but then parking them offshore, etc., and then finding all sorts of ways not to pay their taxes, because the taxes should be going down and serving the people who are being left behind, because corporates aren't doing it by themselves anyway. But No End almost takes care of that by itself, right? Because the money will stay within the system. Now, we all joined on board because we believe in that model, and it is a really, really interesting model. But I have two questions which we can just hit to maybe bring this to a close. One is maybe the easier question. How do we get the word out there and really convince people more? And use this as a plug. What do you need from any of our viewers or listeners in terms of how they could contribute, how they could join in? What can they do? That's number one. That might be the easier one. The second one, which we might need another podcast on, and maybe we're going to have a drink over this as well. But just the way you've described it, which is, as I said, pseudo-governmental in its role in terms of making sure that money goes back to other goods. How do we make sure, as No End grows and becomes super successful, as we hope it will, we keep that bureaucracy out of it? What's going to be the governance model in order to make sure that as it grows and as it gets dividends from some and gets fed back, how do we stop those problems that governments face today in terms of a fight over where resources then go to, which angle do they get spent on? How do we tackle that?
It's a really good question, right? And in governance is something that we talk about all the time, and we're looking at how to improve. But governments are inefficient by nature, right, in many ways. And part of that comes from having, in theory, an endless supply of money to pay your overhead, right? What keeps entrepreneurs up at night? How do I pay overhead at the end of the month? Right?
Yeah.
Always. So that's a key motivator, being able to keep the ship afloat. The other thing is, government, just to quickly on that, one of the core things that started all this off with No End was realizing that government money or semi-government money follows CNN, right?
Mm-hmm. Yeah.
Syrian refugees are important until there's a war in Ukraine.
Yeah.
And Ukraine's important. Then there's a war in Gaza.
Yeah.
And there's still refugee problems with Syria. There's still millions of displaced kids inside Ukraine. And now the travesties that are going on in Western Sudan, that international money's pouring into there and it's leaving Gaza.
Yeah. Yeah.
Right? So government can't be trusted to think long-term.
Yes.
But they follow media.
Yes.
Right? And I sometimes think we have to do things in spite of government, not with government. Government's kind of like a big admin department that doesn't work very well.
Yeah.
Right? So we have to do it around. So then when it comes down to governance, all of this starts with an entrepreneur, right? Because we're not trying to find a new way to manage an NGO. We're not trying to find a new way to manage, deep venture capital tech investments that take 7 years to bring a product to revenue. We're just trying to simply say, is there a better use of profits from what people spend every day? Which, by the way, is $44 trillion. So annually, which is 2 times the GDP of the United States. So it's a huge amount of money, right? And by putting it through business owners and entrepreneurs' hands who have a need to pay overhead, by definition, they need to be efficient.
Yeah.
Because otherwise they go bankrupt. And then when it comes to governance of the money outside, that's how we set up the idea of having philanthropic capital in boards. Right? For example, in being in Danishval, which is the top co or the very first No End company ever created and actually owns the No End philosophy company, you're one of 15 shareholders, right? Who all have, the same in general values, ideas, concepts of wanting to be involved with this, but different perspectives and different wants and needs. But with me together, there's 15 of us. We should, over the course of time, be able to make the right decisions based on that. How we do succession and what we do with our shares. 2-3 people to collude or be inefficient or be fraudulent is possible. 15, unlikely.
It's like the blockchain model, right?
Yeah, and it is. And we're looking at how to bring DAOs in and blockchain into this whole idea. And then underneath the whole structure, if you think at some point in time, if you have thousands of No End companies, the No End philosophy is really about building the values and the tools to implement the philosophy at a company level. Those should be the guiding lines. It's not an ISO for a business. It's a set of values and tools, right, that entrepreneurs can put in. And then will there be mistakes on the money out? Of course there will be.
Yeah.
But my father was a policeman, right? And he always told me I spend 97% of my time with 3% of the population, which is basically the criminal population, right? And I've never understood when you're doing big concepts, and this is one of the things that fallacies of government is they spend so much time concentrating on, 3% of the users abuse a system, that they make a system that's not the most efficient for the 97%, where the fact is, no matter what you do, 3% are going to try and abuse the system.
Yeah.
So why are we focused there, right? It's almost accessible loss. Like in retail business, you have shrinkage, you have allowance or doubtful accounts. Like this is all acceptable financial losses. Stop worrying.
It's just priced in, yeah.
Exactly. You price it in and you worry about maximizing, in our case, the impact return to the 97%.
Great.
So, and the final thing I'll say on that is, I believe there's 2 types of entrepreneurs. And actually, under the banner of entrepreneur, I really say only one. All the great entrepreneurs I've met were there to build stuff. I had a great mentor and one of the founders of DHL. And money wasn't the reason he built that.
Yeah.
Right. And when you asked him what was the most important about it, it was all the people that worked for him. Right. That was his touch to the human world. Right. And it's the building the flip or that's more deal making than entrepreneurship. Right. It's actually salesmanship, which There's a place for salespeople. I'm not saying there's not, but what we're trying to do with No End is about using entrepreneurs. And entrepreneurs can be a one-person small business. It can be a huge corporation, right? That part is just up to scale.
Yeah.
But the values in all those different people are often so much the same.
Yeah.
Whether you're running a small mom and pop restaurant or you're running, multi-billion-dollar organization, right? And it's to make sure your employees are paid, your customers are looked after, and do good things with the profits.
I think that's a really good way that we can close this and bring it around, because it comes back exactly to how you started this. It starts with the why. Yeah. Shout out to Simon Sinek, obviously, with that. I think that's what we've lost. Just a quick story. There was a really good play I saw in London. I think they made it into a movie now. It was about the Lehman Brothers. I forgot what it was called, but it was a play in the West End. And it talked about the generations of the Lehman Brothers. And they came as immigrants to the US. And they started out with just a trading business. Did very, very well. And then expanded into becoming financiers for traders. And then the third generation came along and figured out that we can actually become financiers to financiers. And that was the interesting tale. It was the moment that Lehman Brothers went from being supporting trade into making money off money. Which was the turning point. And I think that's where we are today. And I think that's the danger where we are today, because everyone is just looking, how do I make an extra buck? Yeah. As opposed to whatever they're doing. And again, making money is not a bad thing. That's absolutely fine. And as you said, people should work to get what they need, and people can define what they need in their own terms. And I'm fully on board with that. Some people need more, etc. Needs versus wants, I guess, right? But I think it goes back to that issue that every organization, every entrepreneur should be starting with a real hardcore why. I want to solve that problem. I want to serve that customer. I want to help my society and community around me. As long as we keep that at the heart of what we're doing, I think we're generally fine. But the moment it's how to make a buck out of that, for the sake of making a buck, I think that's where we get a problem. I think that's where no end philosophy can really help shape people's minds in that.
Yeah, I agree. And I forgot the first question.
Was it a question?
You said there was 2 points. One was about government. I can't remember what the other one was.
Oh, okay. Well, listeners can look back and rewind it and answer for themselves. But Jay, listen, this has been fantastic, and I think we can sit down again and we can have another hour chat on all of this, because it's a fascinating subject. I love your take on it. I love what you're doing about it as well, which is why I joined you on the journey. Thanks for coming on Unboxing Impact, and for your contributions, and see you again soon.
Yeah, and thank you. And I remember what the first one was. It was what can the audience, or what can our connections do for us?
Please, yeah. So close it with that.
I think at the end of the day, in what we're trying to accomplish, you can never have enough friends. And that's really what it comes down to. And when I look at our constituents, when I think about it, you have the entrepreneur and the company and et cetera. You have investors, which put in philanthropic capital and debt capital. You have your consumers, which in many degrees is the most important engine to it all. And then you have public as itself, right? But there's leaders inside of all those four areas that are interested in building a new social economic method and ideology and philosophy for the future. That's what we need more of these days, is just people to get involved and see how do we advocate this, how do we build this, but it's across all four of those key areas. And right now we're in the friends building mode, because we're at the very, very beginning of the bell curve. It's in the early adopter stage.
Okay. And then just the last point then on that, if people want to reach out to you, talk to you, how do they do that?
Sure. There's noend.com website. It's got a connection email. We're smart. We're small enough that connect email actually comes to me.
Okay.
And
that's noend, N-O-E-N-D.
Yeah. no-end.com.
Okay.
And I'm on LinkedIn. Of course, my rest of my social media is non-existent, but those two ways you can find me.
All right. Jay, it's been a great pleasure to chat with you. Thanks for coming on.
Perfect, brother. Thanks, Neil.
Thanks.